Welcome to Morningstar. I'm Holly Black. With me is Bhavik Parekh. He's a fund analyst at Morningstar. Hello.
Hello, Holly.
So you've been looking at the flows data for the month of April, and some quite interesting trends in there. I think we might have expected people to still be very cautious after March's sell-off, but we've seen some decent inflows.
Yes, so in March we saw very high levels of outflows, in particular in fixed income, but in April we saw very high net inflows. In particular, what I noticed was striking was that there were high net inflows into active vehicles, active funds. And there's a couple of reasons for that. One, active funds which have been popular in recent months and years, they continue to be popular in April, but they were even more popular than usual. Investors added more money than they have done maybe in the past. And those funds, that active funds which have been unpopular, they were less unpopular. So the net effect was that we saw actually a nice net inflow into active vehicles. And there's from a more technical aspect, there's a number of reasons why investors may be preferring active funds. One, if investors believe that there are areas of the market that are structurally impaired as a result of the coronavirus crisis, then active managers are clearly going to be able to avoid those areas which tracker funds are not going to be able to. And also investors may like the fact that active managers have cash that they have, and that they can use that cash strategically now to invest in the areas of the market where they think that there's best value, something, again, that tracker funds are not able to do.
And what are we seeing in terms of people's risk appetite at the moment? Because after such a shock to the market in March, I think I would have expected people to be feeling more cautious and heading for those more protective and capital preservation focused investments. But actually, equities were quite popular in April as well.
Yes, equities were really the driver of the inflows in April. And at the end of the day, I think it comes down to where investors are seeing the greatest upside potential and trying to avoid areas where they think there's the greatest downside potential. So if we take one of the least risky areas, which is government bonds, the GBP government bond category has performed very well this year. It's actually about 8% up year to date. So clearly, especially with interest rates being so low, it's unlikely that category, those funds in those category are going to perform strongly in the future. However, in the case of equity funds, especially at the beginning of April, funds were still down 20% or more, and the upside potential is far higher. So investors, I think, did well to see that and not just panic and put their money in areas which they thought would be less risky.
And I think another really interesting trend of the past couple of months is how popular sustainable and ESG funds have been. You might think at the moment people are just looking to maximise profits to make up for those falls in March, but perhaps the way companies are behaving at the moment is more in people's minds, and it's making them consider how they're putting their money to work too.
Yes, sustainable funds are clearly it's a very high interest area of the market at the moment. The first 4 months of the year, at least for UK domicile funds, saw almost £5 billion invested in those funds. And in March, where we saw more indiscriminate selling, those funds actually came out fairly well. April, again, saw high net inflows, and there's a couple of reasons for that. One, sustainable funds generally perform quite well. They're not invested in the areas of the market that were worst hit, such as energy and basic materials. And investors generally, when they see good performance, then they're attracted to those funds. And also maybe what's been going on has made investors think about rebalancing their portfolios a little bit, and maybe they've thought, okay, well, as part of rebalancing, maybe I'll put a little bit more in a sustainable fund. So that's really helped increase the flows into sustainable vehicles.
Bhavik, thank you so much for your time. For Morningstar, I'm Holly Black.